The government's policy of reforming the foreign exchange market by floating the naira has covered nearly 2 years. In this report, ECOP examines critical elements in the initiative and impact.
Early in the administration of President Bola Ahmed Tinubu, the Central Bank of Nigeria took official decision to float the naira, citing the need to reform the country's foreign exchange market. The policy gave meaning to free markets economy as the forces of demand and supply determined exchange rate and the value of the naira.
His Excellency President Bola Ahmed Tinubu GCFR, you have not only found an ally in market reform, but also a steward of economic stability. Our administration is committed to strengthening Nigeria's financial market infrastructures through a deliberate blend of regulatory reform, capital market development strategies, and robust public-private collaboration.
The naira has witnessed gradual and constant depreciation with attendant inflationary pressure. But some analysts have pointed out to the much stable and predictable exchange rate regime.
When you begin to think about stability, you think about risk and volatility and things like that, which in the current context of the world that we live in have become very topical. You can see why financial market infrastructure can actually calm nerves when some of our more, our more adventurous, say, political leaders tend to go off in different directions that spook the markets.
The federal government was quick to issue the first domestic US dollar bond. The dollar-denominated investments bond was meant to support the foreign exchange markets. The bond, which was listed on the stock market, was oversubscribed above $900 billion US. The huge amount has helped to guarantee liquidity in the currency markets.
We think that the right momentum is being formed. One of the other things that you find is that any economy is driven by confidence. And you cannot underestimate the importance of confidence. Increasingly, we think that people are getting more confident. Not confident that the future is entirely rosy, but at least confident that the challenges that collectively face us, we can begin now to try to address and to resolve.
If you look at the market traditionally, it's a market that is really 50% international and 50% domestic institutional investors. But in recent times, largely due to the policy, we've seen that figure fall significantly to 90% domestic and 10% international.
Operators of the stock market speak highly about the reforms of the government in the financial markets. They say cheap stocks now attract higher patronage from foreign portfolio holders, including Nigerians in diaspora.
Financial markets, of course, comprise of the firmament of money and capital markets, derivatives, commodity and bond markets, as well as stock markets, currency markets, futures markets, insurance, and mutual funds markets, among others. Financial markets, of course, are vital to the smooth operations of every economy, and their failure often portend or precipitate economic disruption, including things like recessions and rising unemployment. Therefore, financial markets play a vital role in facilitating the allocation of resources and liquidity for businesses and entrepreneurs, and makes it easy for buyers and sellers to trade their financial holdings, as it were.
The fallout from the Forex market reforms have been mixed negatives and positives. The former include inflation, higher taxation, and weak purchasing power. On the positive side is the predictable range of the value of the naira. Traditionally, that economic condition makes exports from Nigeria cheaper in the world markets. The whole idea is to increase patronage for Nigerians' export sales. Some people have argued that weak currency for a country may not be a poor economic option. What Nigeria needs are continuous and sustained production of goods and services targeted at exports. The currencies of Japan, South Korea, and China, for instance, are deliberately kept weak by the government to encourage export trades. In that situation, the huge volume of sales bringing enough foreign exchange to make such countries rich.